Now, a very good afternoon, good morning. Welcome to HYCM's workshop with myself, Giles Coghlan, a Chief Market Analyst. I do hope everybody is doing well, that you can see my screen okay and hear my voice all right. I've been having a very, very busy time since I got back from Dubai with the whole UK PM change, with Rishi Sunak now being the first billionaire who's living in number 10 Downing Street, as well as the youngest Prime Minister in the last 200 years. So it's been a very, very busy time. And but thankfully, I have got time for us to meet together to go through a very important central bank meeting, which is the one with the Bank of Canada, which are meeting today, later on this afternoon. So this gives us opportunity to get ready for the meeting and prepare for the potential high probability currency pairs. And there are some potential opportunities that are worth looking at with the Canadian dollar. So I hope everybody's okay, can hear me clear enough, and everything's coming through very straightforward. Remember the basic concept when we're trading, we always want to trade strength against weakness. We want to trade the strongest currency against the weakest currency in order to find a highest probability currency pair. And often out of major economic events, particularly now as central banks are changing the pace of interest rate hikes and how quickly countries are growing, economic data points have become very important once again. So we will be looking at the Bank of Canada meeting. So without further ado, I want us to get ready for that meeting. And I'm just going to pull us through to look at some Canadian data so we can see exactly what to expect as we go into the meeting. Now, I'm just going to maximize this up. We can see here, 26th of October, we have the Bank of Canada interest rate decision coming at 3 o'clock UK time. So that is in 90 minutes from now. So a couple of things for us to first and foremost to note. The inflation print in the Canadian economy has been gently dropping. So you can see that the core inflation print is 6%. Yes, 5.7% was forecast, but the 6.9% is down from the 7% prior. So 0.1% was the core inflation. The headline inflation was 6.9%, slightly down from the prior reading, and the producer price index was also down from 10% prior meeting down to 9%. So although they were slightly higher than forecast, what we started to see is some indications of inflation just weakening, and that is a very potential positive sign for the Bank of Canada. We've also seen jobs falling. So you can see here, full-time employment has also dropped. So your participation rate is lower, and the unemployment rate, that's good, 5.2%, better than the private 5.4%. And the full-time employment change is 5.7 thousand. But we have seen falls in the jobs market as a trend. So jobs are falling, the prices of houses is falling in Canada, and we saw this retail sales miss as well at the end of September for July's meeting. So there is starting to be some sign of a slowdown in Canada's economy. Balance of trade also minus 1.52 billion. So put that all together, and we have seen some slowing in Canada's economy when you take it as a whole. Now, at the last interest rate meeting, the Bank of Canada did take a more hawkish view, and we saw a surprise 100 basis point hike. Now, for this meeting, what's expected is a 75 basis point hikes expected, and that is expected a 71% probability. So nearly just over 70% expecting 75 basis points. So that tells us that there's only 30% of expectations for a 50 basis points. Now you can see the expectations have been building into the meeting for a more aggressive Bank of Canada. So if they hike by only 50 basis points, and if you look here, you can see that the expectations are that they'll hike by, the minimum is 3.75, 50 basis points, maximum 4%. So if it's a 50 basis point hike, you can see that that is only partially priced in. So that would result in some more Canadian dollar weakness. And if you look at the Canadian dollar as an index, let's just move over to it. What you see here with the Canadian dollar as an index is that it's been rather elevated recently. So the outlook for the Canadian dollar has been really tilted to the upside, perhaps beyond what you might reasonably expect. So what this means is that any sign of slowing down from the Bank of Canada is likely to result in some Canadian dollar weakness. So this is what we need to look for specifically at the rate meeting. So the expectations are for the Bank of Canada to raise interest rates up to 4.5% next year. So current interest rates are 3.25%. So if they hike by only 25 basis points, that would result in sudden Canadian dollar downside. And we want to trade that against either the Australian dollar or the pound. Okay, so the best opportunity is either in a 25 or 50 basis point rate hike. And then if the Bank of Canada start to make some signs saying, we're concerned about slowing growth, perhaps we have to consider, what might go wrong in terms of growth metrics. We have to be more cautious about crimping the housing market further and jobs are falling. If they say anything like that, anything negative about growth, any indication that the interest rate level might be lower next year, then you'd expect the Canadian dollar to weaken. So the forward guidance is going to be very, very important. Now, the reason we want to look at the Australian dollar as well is, if I just put the major countries up, is because of this important reading that we had overnight in terms of the Australian inflation print. Can you see here that the inflation print came year on year, headline 7.3%, above the 7% expected and in line with the high expectations. The trim mean came in above the highest expectations at 6.1%. And the trim mean quarter on quarter came at 1.8% above the high expectations. So 2 above the highest expectations and a beat on the headline in line with high expectations. So what that tells us is that there has been a little bit of a surprise here. And the Reserve Bank of Australia at their last interest rate meeting, and if you'd like to keep up to date with central banks, do make sure you read my blog. And you can see here, I've got Central Bank Watch. If I just put this in the link, I'll just put this in the link. And you can see that at their last central bank meeting, they kind of signaled lower rates ahead, okay? So what that means is that with the Australian dollar seeing some higher inflation, we'd expect the Australian dollar to be a bit stronger now. That's why in today's session, you can see the Australian dollar is the strongest currency of the day, because the high inflation questions that narrative from the RBA that, they're going to have to slower rates, maybe inflation's coming under control. It doesn't look like inflation actually is necessarily under control. So because of that, what we need to do is to be aware that the Australian dollar might find strength. So if we see a hike by 50 or 25 basis points from the Bank of Canada, if they if they indicate that the terminal rate, the maximum rate for next year, Bank of Canada indicates it's going to be sort of lower, then you expect Australian dollar CAD upside. Now, Charles says the New Zealand dollar might be a little stronger than the Australian dollar. Now, it will depend a little bit on the risk sentiment, of course, and there are other factors you have to keep in. So if the risk profile turns off, that's negative for the Australian dollar. But the logic that you need to be aware of is that the recent inflation print should be short-term Australian dollar strength. So that, and you can see that. You see how that's played out, Charles, in the data? So you can see, look, do you see how the Australian dollar has outperformed the New Zealand dollar since the morning session? So look, the New Zealand dollar wouldn't be a bad currency to trade it with. That would be absolutely fine. Okay, but you can see how the Australian dollar is outperforming. So you'd be looking at, on a miss, you'd be looking at Aussie CAD upside, or I like pound CAD upside with what's been going on in the UK with Rishi Sunak. So if the Bank of Canada disappoints, pound CAD upside and Australian dollar CAD upside both make sense. In the UK, the markets have been generally reassured that a former hedge fund guy is now at number one. The first is now UK Prime Minister, the first UK Prime Minister to be a billionaire, living in number 10 Downing Street. And many people say that's a bad thing. He hasn't got the touch of the common people, but I personally think that's actually quite a good thing, because if you have someone who's used to handling vast amounts of money, then in many ways they could be well placed to handle a $2 trillion economy like the UK. So I don't think it really is as bad as perhaps people are, fearing. So that's something to watch, but that's basically what we've got. So a dovish Bank of Canada, we'd favour Aussie CAD upside, pound CAD upside. If the Bank of Canada are more hawkish, then I don't see it as a trade. Okay, I don't want to trade it. Yeah, Charles, there's markets in love with Sunak, but the economic situation will not change quickly. Now, the outlook for the pound won't change quickly, but when it does change, Charles, my take of it is the best chance for the pound comes from the dollar. Yes, the pound has been heavily down against the dollar, but down about 17% over the year against the dollar. But the Aussie dollar's fallen 16%, New Zealand dollar over 20%, the yen over 30% it's fallen against the dollar, and the euro's nearly 16% against the dollar. So lots of currencies have fallen sharply against the dollar. It has been a unusual kind of situation from the UK, that the UK has become very myopic. I've been speaking to UK media for the last 2 weeks, kind of incessantly, Charles, and it's amazing how blinkered we are to think that all of the woes of the pound come from the UK, when actually a lot of the woes for the pound are coming from a strong dollar. And if you just take a look at bond markets, what you can see is that there's a beginning of an indication of a pause. You see how yields are lower, 10-year yields, bonds yields, gilts are lower. We expected that on the relief over Rishi Sunak, but bond yields are just a bit lower, and that's allowing the dollar to sell off. And if you just take a look at the dollar in the major indices, you can see, look, dollar index trying to break through that daily support level, testing that 110 region, and you see that is just giving the pound, the Aussie, New Zealand, everything a lift. So I think the best hope for the pound, ironically, Charles, actually comes from the good old dollar. So I think it's a little snub to our pride, really, that actually, the biggest hope for the pound is actually going to come from what's going on with the dollar. So, plenty to focus on there from that perspective. Right. Thanks for your comments, Charles. Good to get a bit of two-way action going, and you raised some very important points there, so thank you. Now, yeah, let's look at technically the potentially Aussie CAD and pound CAD to see what we might see. All right, we'll look at the dollar chart here. We'll use that. So first of all, let's look at pound CAD. Right. So pound CAD, let's see. Already being supported on that strong pound. It's got a little trend line developing there. Let's have a look technically where we might look to enter. Yeah. Right, what I'd be looking at here is if we get the desired market outlook, any return to that pivot point would be suitable and stops just underneath that S1. Or for a breakout trade, we could look at going with a break of this near-term top. I think I'd use that little point there. Go for a break and a return to that, targeting the R2. And just watch out for that big long-term trend line there. So that's what I'd look at for the pound CAD. For the Aussie CAD, again, that is, tracking higher, which is what you'd expect with the changing outlooks. What you'd look for here is, let's have a look. We are just into this overhead resistance. That makes it a lot easier. Yeah, so here definitely would potentially look at a retracement to that 8750 region, and stops can be placed quite tightly just underneath that 8700 handle. To be, to put it technically somewhere safe, just underneath the pivot point. So that's basically what I would expect is if we get that, then look for a retest of this region here. So around that 8750. Yeah. Just going back to Charles' point about, the pound's finding some relief at the moment. It is, right? One of the key market dynamics I've written on this here. There's a key market dynamic that you need to look at. It's on Trading Insights. Here we go, Trading Contrary Opinion. Now, I've seen this played out, very clearly for me. I've had countless media guys contacting me, and all of them to a man and a woman have been saying, how bleak the outlook is for the pound. I was speaking to BBC Scotland, and they were like, she said it's almost like you're talking that this has all been a fuss about nothing with the pound, And basically, read this article. I put the thing is, and sometimes, when the sentiment is maximally pessimistic, that's when you see a turnaround. Okay, so that was when I was trying to travel to Dubai, and someone was. This is when the pound really shook on that gilt wobble. And I was saying to a journalist, I said, this is probably the bottom in the pound for now. And that turned out to be the case. Now, it's not that I'm, a prophet or, some kind of trading genius. It's just the psychology of it. When everyone is maximally pessimistic and maximally bearish and maximally dovish, when everyone is like that, then there's no one else left to sell. So we're in a situation now for the UK where, there's hardly anyone left to sell. A lot of the bad news has been priced in. Now, how can it get worse? Well, it can get worse if the Russia-Ukraine crisis, gets worse. That could cause the pound to fall further. It could get worse, if the cost of living gets worse and the UK economic outlook continues to deteriorate. Yes, of course, the pound can continue to sell off. But there's a lot of bad news priced in. Remember, a UK recession was priced in really from the start of the summer. Investors were expecting the UK recession. The Northern Ireland Protocol Brexit risk is carrying on and has been carrying on, for years. We still haven't resolved properly our relationship with the EU in the UK. The cost of living crisis is dragging on with the Russian-Ukraine crisis. and the strong dollar is affecting many different countries. So a lot of this has been priced and expected. So yes, it is possible for the values, but near term, I'm expecting a recovery in the pound, and the FTSE 100 looks very cheap for a longer term view. But we have looked at key aspects here today, and we've looked at trading the Bank of Canada meeting. It is due out now at 3 o'clock, 1 hour's time. A more dovish Bank of Canada should give a good Aussie CAD and pound CAD upside bias. So I hope that's been helpful. If you've got any questions, please do ask questions now. Otherwise, don't forget we are back again on Monday for our look ahead week. And of course, next week, we've got some very important meetings coming up. We've got the Federal Reserve meeting, and we don't forget we've got the ECB meeting tomorrow. So there are some important meetings coming up. Okay, folks, do look out for that Bank of Canada meeting. A dovish reaction is definitely worth looking at. I'm looking at it for a potential tradable opportunity, but I do need to see that dovish reaction. Pound CAD, Aussie CAD are my currency pairs of choice. Also, don't forget to look out for earnings if you're trading stocks. Tomorrow, markets are laser focused on Apple earnings. We had disappointing earnings out from Microsoft and Alphabet, that's Google's parent company, and that did send markets into a little bit of a wobble, and that wobble is maybe carrying on a little bit now. But if we get disappointing earnings from Apple tomorrow, that could easily impact sentiment, and watch out for that. Particularly if we see some very negative sentiment, we might end up finding the dip being bought, because bad news could ironically be good for stocks if it means the Fed's going to be pausing their interest rate cycle. Folks, thank you all very much. Take care. Have a very good rest of the afternoon, and I look forward to seeing again on Monday. Thanks everyone now. Goodbye.